12th of February 2020. Good morning from my side. Good afternoon, good evening, wherever you are. Piotr here, and we are going to make an update post RBNZ rate decision. No change. New Zealand dollar, the biggest winner of the Tokio session, jumping higher based on the RBNZ statement. Now, looks like, based on that statement, RBNZ finished the cycle of the lower rates. The expectations are the next move gonna be higher, but say hello, not earlier than 18th month from now. So looks like the initial reaction is to the upside based on the information that RBNZ probably, the forecast saying that they finished the cycle of the lowering rates. So we are going to check New Zealand dollar right here, right now. So without the further delay, let's jump straight into the first one. All right. So we are going to discuss the fight between the neighbors. So AUDNZD as the first one. That's the monthly chart we were discussing some time ago. I've been looking to go long. I've been long. Don't forget, you can monitor my trades. The link is in the description. All right. The red dotted line here. All right. That's the yearly open. And as you can see, during first part of the February, right, we were trying to move higher. We were above yearly open. We were above January high, right? But we are pulling back right here, right now. So huge fight is going on around the yearly open. And to be honest with you, with such a rejection right here, that doesn't look good. Looks like the market might have appetite for more downside, right? Let's check what we have here. Lower high. We are fighting already twice around 270, right? But I do believe right here, right now, it might be the case that market may want to hit that stops, right? Here, we have to be honest and add the thing related to what is going on in China with the coronavirus, all right? Of course, it influenced the Australian dollar, not giving the helping hand, right? So, as long as we are not gonna get strong positive news from China in relation to the coronavirus, all right, we might see move to the downside, and the first target is below 0280, and we might target 10150, all right? What is 10150 based on this monthly chart, right? We might finish that business, already did, right? And if we are going to break through that level, the parity as a next target. Okay? From the bulls perspective, we need to hold that particular double low here, right? Around 270, 260, okay? That's the monthly chart. Let's have a look on a smaller time frame, and that's what we have here. And here I see from the daily chart possibility for bulls to step in. If that's the case, that for the whole January, beginning of February, that was the consolidation, right? So what we have here is a break out of the consolidation, and right now we are testing that breakout. All right, we are testing that breakout. So two significant levels, the yearly open and the upper shadow here. Oops, sorry guys. The high from the 23rd of January, and then the mid of that consolidation, and we are talking about the levels close to 0365, 0360 again. All right, so that's how the bulls may try to treat this daily chart. On the other hand, the bears may say, hello, you were trying at that supply and you failed, so time to go lower. So trying to summarize Aussie versus Kiwi, buyers should be active around this yearly open as a retest of the top of the consolidation, and then again around 360, right? But based on the current reversal, it's gonna be important where we are at the end of the day, today, tomorrow, right? If we are going to get back below yearly open, and let's say we are going to close today, tomorrow, right? That's gonna be huge, okay? That's gonna be huge. So for now, for the aggressive attempt, weekly open, holds for now. All right. I would like to see as a bull close above yearly open, another lower shadow towards the mid 360, another close above yearly open. So two lower shadows, that would be sign that, well, something is going on and we might see higher levels. So let me visualize that for you. Let's say that's the today. I want to see something like this as a bull, right? Tomorrow, very similar price action, right? Two lower shadows and daily close above yearly open, and that could bring Friday's rally, right? On the other hand, sellers want to see double day close below yearly open or weekly close below weekly open, and we are talking about the levels below 104. So here is a thing to be patient, all right? But there is New Zealand versus Canadian dollar, and here, right, taking into the consideration the current RBNZ action, plus taking into the consideration what is going on with oil, we've seen a little bit of the bounce again during the Tokio session. I'm not gonna be surprised to see a little bit of the stabilization, All right. Some kind of the consolidation, but everything above 85, right? And as long as we are holding above 85, right, I would look for this type of the price action with the final break to the upside, right? What we are talking about as the upside targets, I think levels above 88 towards 88.50 or 60, this swing high. Okay, so with New Zealand Canadian dollar, buying the dips as long as we hold based on a daily and weekly close above 85. All right. So that's how I see the New Zealand dollar within the commodity currencies block. Looks like Kiwi might be the biggest winner. The oil is not supporting Canadian dollar, and the situation in China with the coronavirus is not supporting Australian dollar for now. So, well, my tip would be here New Zealand versus Canadian dollar. I'm going to get back with another New Zealand dollar update in relation to the other majors. Have a great rest of the day, guys. Don't be trapped. Take care and see you around.